Welcome to a new episode of Master Your Mistakes. Today we have Haydn Evans. Haydn is going to zoom in on a few of the early mistakes that he made in entrepreneurship, specifically on his finance startup with his business partner Dan, Flex Lending. Haydn, welcome to the show.
Thank you, my man. Thank
Boom.
you for having me.
First big question is, what is the mistake or learning curve that you're going to tell us about today?
I think the main mistake relates to the first couple of months when we formally set up our lending business, Flex. And the mistake was trusting people and partners within the business to perform at certain rates of speed, when we didn't have the system set up in order to make that happen. And that, it's a simple point, but it actually caused a lot of stress, a lot of chaos. And one particular case ended up not completing, which was incredibly frustrating in the beginning of the business. And it also meant that we were completely undifferentiated as a lender. So we really didn't have anything to differentiate ourselves from the, quite frankly, hundreds of other bridging lenders in the business. So it was a core mistake. It was a deep mistake. And yeah, it caused a lot of problems.
Okay, then to set the scene, could you tell us concisely what Flex does? And in the early days of running Flex, how did you approach brokers, partners, deals, etc.?
So in short, Flex Lending is a bridging lending business. So what we do is we'll lend to someone who needs a loan for speed secured on a property. So it's like a mortgage, but much, much quicker. Okay, so in terms of an overview of what happened, we started Flex, and and what we expected when we started Flex is that we would be able to lend funds direct to property companies. And those property companies, we just expected that they would use us without any differentiation, quite frankly. We thought we'd found a niche that we were serving, which was property companies directly. But quite frankly, we had no niche. So what would happen is we would call up these businesses, and we'd be met with, something along the lines of, okay, sorry, let me just interrupt you a second. What makes you different from this lender that I spoke to last week? I'm always getting calls like this. And quite frankly, we didn't really have anything to say. We were just relying on our experience. Okay, well, look, we've operated in this industry for X amount of time. We've got these expertise. People didn't care, quite frankly. And when we specifically did get the first loan, the first lead, the first serious loan, it ultimately just went completely wrong. So we started the process, and we relied on our own work. We relied on our own expertise. We relied on the expertise of the solicitors that we worked with and the staff members. And we just magically thought we could get that loan through with speed. But it ended up being an incredibly protracted process. That process ended up going on for about 3 months. And we just didn't realize that this loan was going nowhere from about a month in. So we spent a huge amount of time, money and resources on trying to get this loan over the line, until we realized 3 months in, it was going nowhere. The borrower wasn't actually engaged. We weren't performing at the levels we should be for the borrower, and it fell through. And that was a big blow to us, because it would have represented a large amount of revenue. And we had to say goodbye to it. And at that point, we sat down and thought, what are we doing here? Like, what's actually differentiating ourselves from, the other competitors in the business? And how has this happened? how with a team of our expertise, we basically just wasted 3 months of our time and everyone's time. So that was the major error and mistake that happened at the beginning.
Okay, so during this 3 months of hell, at what point did it really kind of hit home that this would be a dead end? And how quickly from realizing that did you guys decide to move on?
Okay, so we realized when it was going to be a dead end. Quite frankly, I didn't realize this, but my business partner Dan realized. It was the moment where we'd negotiated the transaction, we were ready to complete, and we were about to complete, and the receiver, who essentially was in charge of the transaction at that point, the receiver basically takes on a property when they're about to repossess it and sell it. The receiver came back and said, "Oh, actually, borrower, you don't owe X amount of money on this loan. You owe X amount plus 30,000. We went to the borrower and said, "Okay, look, this is the amount we need to clear. Have you got funds to do that?" He said he had in the beginning of the process, and then he said no, he didn't. So it was that moment where Dan was like, "Look, we've just wasted 2.5 months on this. We didn't have our processes in place to check this in the beginning, and quite frankly, we've got nowhere."
Okay, so then after this, when you're doing the post-mortem and thinking about what differentiates you, how did you go about that sort of process? What kind of things did you think about between yourself and Dan?
When we looked back retrospectively at what happened, we realized that we weren't differentiated. We realized that our processes weren't solid. Our systems weren't solid to perform. And we also realized that we were just relying on trusting people within our organization and partners of ours to transact at speed when we didn't have the accountability structures in place to make that happen. That's not anyone's fault but ours, just to be clear. Now, what did we do about that? So we actually sat down over the Christmas period, and we asked ourselves, after reading Alex Hormozi's book, $100 million Offers, sat down and we just answered the questions that he asked us to. We didn't even read the book in full. And the questions were, how can you transact half the time that your competitors can? How can you do it with zero risk to your borrowers? So how can you eliminate all the risk to your customer, in this case of borrowers? And how can you make it twice as easy to operate in this field? And what we did is we didn't rely on our own intuition. We had a conversation with the best bridging broker that I know in our industry, Neil Telford. We sat down with Neil and we said, "Neil, can you give us an hour of your time? Can you answer these questions for us? In an ideal world, if you could invent the best bridging loan product possible, what would it look like?" And bear in mind, we're talking to someone who's dealt with the industry for over 10, 15 years, has seen all the problems, is direct with the borrowers of the issues that they encounter. And he basically spelled it out to us. He said, in the best bridging loan company would have a guarantee. They would ensure that the deal completed in 2 weeks or the borrower gets money. So that's what we implemented. We said, well, look, we know that we can complete transactions quickly and we should be held accountable to that. So we turned around and said, look, we've got a completion guarantee. So we're the only bridging lender in the industry, as far as I'm aware, that says, look, if we're not ready to complete within 2 weeks, we'll give you as the borrower £2,000. So that was a massive win for us, and people have really engaged with that and really liked that. The other was that borrowers and brokers, they really do not like doing paperwork. I mean, I don't like doing paperwork. I say we're allergic to paperwork, and it's the frustration and the time that takes to do, which quite frankly is just a waste of a borrower's time. It's a waste of a broker's time. So we took that question. We asked that question of Neil, as what would we do to make it as easy as possible? He said, well, eliminate all of the unnecessary paperwork. So now what we do, as soon as a borrower says they want to go ahead, the same day we'll create a WhatsApp group. we'll add the broker, we'll add the borrower, and we run it all on that WhatsApp group. So something that should take what would have previously taken a week to start now takes 2 minutes to start, and we're direct with the borrower. And the borrower loves that. We'll jump on the phone with them on WhatsApp, we'll briefly explain the process in 2 minutes, and they can run that whole entire process through WhatsApp. Now, the additional advantage that gives us, it gives us the control of the whole transaction. So you remember before, one of the main mistakes I made was just trusting others to perform. And that's not their fault, it's our fault because we didn't have the systems in place. Because we are directly in communication with the borrower's solicitor, all of the parties involved in the transactions, the estate agents, the broker, the solicitors. That means that we can ensure to get it through quickly. Do you see what I mean? We have the direct communication with everyone. We have the control. So the system that we've made ensures that the transaction goes through quickly. And then the other thing that Neil said was, look, well, you want to try and eliminate all of the risk for the borrower. When a borrower is using a company they haven't used before, they don't want to be putting any money down. They don't want to be putting money on solicitor costs up front. So most bridging loan companies will insist about 2 or 3, sometimes 4 or 5,000 pounds up front on account. We completely remove that. So there's no upfront costs at all. There's no risk to the borrower. So why would the borrower not give it a go? You see, there's no real risk to them. We deal with that. We pay for it up front for the borrower. So essentially what you've got left is you've got a product where you're saying to a borrower, look, these guys are serious. They're putting their money where their mouth is, and they're saying, look, if they're not ready to complete, if they make an error and they're not ready to complete in a couple of weeks, then they'll give you £2,000. Secondly, don't worry about all the boring paperwork forms. It's a WhatsApp group. Open it in 2 minutes. You'll be direct with them and they'll run the transaction to make sure it happens quickly. And the third thing we're saying is there's no costs. There's no cost up front. So why would you not give it a go? So really, we're very grateful to sitting down with Neil and having that conversation, reflecting on this massive error that we made in the beginning. And quite frankly, as soon as we made that change, it was like that. Immediately, customers, brokers, they were referring us. I've never seen such a great product before. I've never dealt with such a fast lender. It was overnight. And it's just because we simply said, okay, what's important to the broker from someone who knows what they're talking about? And we just did it. We just designed what they wanted. We didn't think about, what would be cool in our head? What do we think is a good idea? No, we went to the data. What are the real problems from someone who knew what they talked about? And we just worked with Neil and created that. And yeah, that's really, really worked well for us month on month.
I'm thinking of those 3 big differentiators, which for you and Dan are the hardest to implement? And do you think it will always be that way? Or as the business evolves, do you think it will change?
So I think the hardest differentiating factor in our business to implement and make sure we perform is the 2-week guarantee. So the 2-week guarantee is as such that we are ready to complete in 2 weeks. Okay. So that means that we have to be incredibly fast when it comes to our legal process. So the day that we send an instruction, we immediately send out all legal paperwork and all questions, so all inquiries out to the borrower's solicitor. And we do that without any costs up front, no legal undertaking, no fees up front. Okay. Now, that's part of our system now, and the creation of the encrypted, secured WhatsApp group is part of our system now. So that's fairly easy, but what we find is difficult is we are still relying on a third party, which is the borrower's solicitor. And there's no criticism of them. We work with borrower solicitors who are incredibly efficient, which is great. But ultimately, they are a third party, and we don't have full control over them. So it is difficult trying to hold certain solicitors accountable for producing that information on time. Okay, so that can impact the timescales. So that's difficult. It's outside of our control. Now, what we've discussed doing actually is streamlining the process even further, and this is a implementation sort of, Flex 2.0 perhaps, where we will be giving, either we'll be recommending the borrower a solicitor themselves who understands the process and can do it much, much quicker because we've got an element of control of the process then. Or we are in the process of creating a pack. So it's a short pack that the borrower can complete, and it's on an online system. So it automatically links to our solicitor and the borrower's solicitor. So it's done online. So essentially these questions are answered by the borrower direct, and then it's immediately uploaded. So therefore, we're not having to chase, we're not having to rely on someone to perform. And I think that's a real learning, actually, because, I think the success of a business or the success of a lending business that I've seen so far, the business doesn't fall to the expertise of the individual. It falls to the efficiency of the system. So our system that we have in place right now is that like an 8 out of 10, which is why it performs most of the time. But the 2 times out of 10 it doesn't, where we're relying on a third party, on a person, that's when it falls down. So what we're actually doing now is we're trying to develop a system, and I think that's the key learning here. It's a system that never fails to ensure that we can transact quickly. And we're relying on, automating that essentially, with the borrower filling in something that links to everyone automatically.
Yeah, that makes sense. I really want to pick up on the expertise versus systems, and specifically, how do you feel that both yourself and Dan have kind of developed as individuals during this process? What are each of your different strengths, and how do you rely on each other?
Firstly, building this business with Dan has been, invaluable ultimately, because I think one of the reasons why we both work quite well together is we have strengths and weaknesses that complement each other. He's probably got much more strengths than me in this area, but where I think I do excel in, he might struggle in a little bit more than I do, and where I struggle with, he certainly excels. So a good example of that is Dan has a background as a lawyer, working specifically in the bridging loan industry for almost 20 years. So that kind of depth of legal knowledge is, I don't know any other solicitor that has that kind of level of detailed knowledge, specific detailed knowledge. So for Dan, the strength of him coming in was knowing how to solve these legal problems in a commercially minded way that might stump most solicitors. Most solicitors, when they encounter a particularly difficult legal problem, they may just say, look, sorry, we can't handle this, or sorry, that's not for us, and just say we can't do this loan. Dan, on the other hand, because he's worked with Gunnar Cook, a partner at Gunnar Cook's, an award-winning bridging loan solicitors, international law firm, he's seen these before. He's got the expertise to solve these. Now with myself, I guess my strength comes down to building systems, building sales systems. So that's been my past experience, building sales systems. So and ensuring that things are done at speed. My whole career has been based on transacting properties to completion within a couple of weeks. So I took that specialized knowledge and implemented it into the sales process that we have here. So that enables, from a sales point of view, for us to transact very quickly. And then the specifics, the legal issues can be solved very quickly by Dan. Now, I think the 2 biggest challenges for us, and where we've had to grow the most, is taking our knowledge and then building it into the system. So Dan has done that creatively with the use of online software, where the questions raised are all on a portal that anyone can access, and has obviously taught our own internal legal team how to assess these. And we work very, very closely with Gunnar Cook to to assess these transactions in the right way. So, I mean, without going into the detail on that, because it is a bit technical and again, probably above my pay grade and more suitable for Dan, is that, he's taken his expertise and he's having to systemize it. Now, that's still an ongoing challenge. And I think the same for me. I think it's all well and good. There's a lot of background knowledge in my head, but it's difficult to implement it actually into the systems, and that's only what we're starting to do more now. So I think those are probably the two areas of growth that we still need to implement, especially as we scale, because currently dealing with a loan pipeline of about 30 loans at the moment, that's manageable with the systems we have. But as we start to get to 60, 100 loans a month, that's a step change, if that makes sense.
And now thinking about this business from the customer or client's point of view, a double-sided question. What has been one of the most positive pieces of feedback that you've had from a client? And then what's been a piece of feedback that's been toughest for you to respond to and overcome?
We're lucky enough to have had a lot of positive feedback since we implemented the new system that Flex operates on, inspired with this conversation with Neil. So we're very grateful for that change. And I think I'll take two that are probably my favorite. I think the first was we were working with a borrower, and his portfolio of properties have been taken into receivership. So what that means is essentially he's got a portfolio, he's fallen behind on debt, he hasn't been paying these mortgages, and the bank has taken those properties off them and is saying, look, we're going to sell these at auction. So you're going to lose all your properties from this portfolio. And we worked to solve this problem with this bank, with this borrower, and quite frankly, the bank, who I won't name names, but it was a massive institution, was making it so difficult at every turn for us to clear this debt. They weren't responding quickly. They were delaying matters. I don't think it was on purpose, but it's just a reflection of how some of these larger institutions can just slow things down for people. And he was in a very, very difficult situation. But we were managed, because we were working directly on this transaction with Neil at Capital B, the broker, and with the borrower directly on WhatsApp. We were able to get these transactions completed using some very creative financing as well to help him out, because the main bank was not playing ball, and we managed to save those loans from going under. And it was just amazing, because he called both Dan and Neil, the borrower, and just said, guys, thank you so much for stepping up and saving this, because if you hadn't done it, they would have taken the properties. And it was just such a nice feeling to think that, I think in finance and banking, people get a bad rep, but the borrower took his time to just genuinely thank us for solving that situation. And, we were all just, it was a group effort. We were all just so proud that we'd got it done and we'd saved the day. And it was just so lovely getting that sort of personal feedback. And it kind of makes you feel like it's worth it, because you're not just doing it for the money. You're doing it to genuinely solve these problems. Because it's amazing how much difficulty people go through, financial difficulty, when these loans go wrong. And to be part of something where you can actually genuinely solve that and get someone into a stable position again so they can pay off that debt and move on with their life it is meaningful. It means a lot. So that was brilliant. And then working, I think one of my favorite pieces of feedback from a broker was, he just said, look, it's the best bridging lender I've worked with, the best system I've worked with. And this is coming from a chap called Hugh, who heads up Capital B Wales, and I mean, he's got a huge wealth of experience. He's been in the industry for a long time, over 20 years. And it was just so good to get that feedback from someone who is such an experienced professional. Now, I think we've had some feedback that we've had to take on the chin and take responsibility over, that has been difficult as well. I think one of the main pieces of feedback we got in the beginning from both our both internally with our organisation and externally from the brokerage partners that we work with is us working with valuers who've downvalued properties or have produced, more importantly, have produced reports which are just subpar. So the way that it works in a bridging loan company is that most of the time a bridging lender will have to rely on a valuation. They'll have to rely on a valuation in order to loan. And we've had a number of problems where we've gone for a cheaper valuer, or we've accepted a valuation that we've been given. Maybe it was a previous bridging lender who was involved and they've given us a valuation. And that's just led to problems in our underwriting. It's led to problems in our underwriting. It's led to having to go back and forth multiple times with borrowers and internally with our credit team. And it's just caused a lot of internal chaos with us. People might not necessarily see it from the outside because ultimately we end up solving that problem, but it created a huge amount of stress for us internally. So really, I think the lesson there was, choose a valuer, choose a good valuer who's going to get it right, who's going to get the right level of detail. So it doesn't cause problems down the line. Sometimes it's actually worth paying a little bit more for a good valuer who well, who's performed well in the past, who's got the right level of detail, so that internally, we don't get it in the neck, but by not supplying enough information and then having to go back and forth, or the valuation result coming back and it not being expected or being done incorrectly. And then us having to clear up the mess afterwards. So, luckily we've always got there with it, even when that's happened. But it's caused a lot of internal stress. So, the learning that we took from that was, look, there's certain valuers that we work with, there's certain valuers that we don't, and just being clear on the boundary. If we're asked to use a certain valuer or use this old valuation, sometimes we're just going to have to say, look, no, we can't, because look, we're sorry to disappoint you, but ultimately we know that's going to be better in the long run. It's a challenge.
And as a final question, if you could wrap up or summarize the key lesson that you've learned throughout this period, and particularly the first story that you mentioned, in a single concise line or lesson, what would it be?
So I think the biggest lesson for us off the back of the mistake that we made in the beginning of Flex a year and a half ago now is trust people, but systemize everything.
Excellent. Okay, that's a great moment to end on. Thank you, Haydn, for your time. The end of this episode.